Well, here to share the entire contents of their brain on this humongous subject is former Invesco Chief Marketing and Analytics Officer for the Americas, Emily Pachuta. Welcome to you, Emily. Lovely to see you. How's things?
Wonderful to see you as well, and thank you so much for having me. I'm really looking forward for to talk about this subject that I'm so passionate about, which is that intersection of creativity and data and analytics.
Amazing. So great to have you here, Emily. Let's start by hearing a bit about you and your career background.
Absolutely. As you mentioned, I was the Chief Marketing and Analytics Officer for the Americas at Invesco. Invesco is a global asset manager. It's primarily a business to business environment. And my whole career has been spent in financial services, in marketing roles of increasing seniority, and then also in data analytics roles as well.
All right, fascinating. Well, great to have that wealth of knowledge here on the CMO stage. Now, a little earlier, Emily, I asked the audience about where they struggled the most among three key areas, and we've got those results to take a look at now. So let's get those loaded up and see how you all voted. And Emily, I'd love to get your thoughts. Okay, so 46% saying driving culture change is their biggest challenge, followed then by data and creative thinking coming in at 26 and 23% respectively. What do you make of that? Were you expecting culture change to come out on top?
I'm thrilled to see that culture change is on top because that is absolutely the number one reason why I'll say transformations or innovations fail in companies. And so it's great that the audience, is honing in on that subject. We're going to talk about it today a little bit. I also think it's interesting that creativity and data and analytics are virtually tied. I think that that's quite telling as well.
It really is. It just shows that the challenges really do extend across the board. So glad
Yes.
that we've got you here to shed some light on those and how you've navigated them yourself. We're going to get your slides loaded up now, Emily. And as I'm sure you're expecting, yes, Emily will be taking your questions a little bit later. So do get those into us using the chat. I'll be back to ask those in a little while. For now, though, Emily, please take it away.
Great. Thank you so much. So, everyone, we're here today to talk about the intersection of data and analytics. And I think, with 2.5 quintillion bytes of data generated every day and the legitimate focus on marketing ROI or marketing's contribution to revenue growth, it's no surprise that data and analytics has taken center stage for marketers. But where does that leave creativity, which has historically been the hallmark of human centric marketing? Today, we're going to explore how creativity can emerge from what I'm calling the long shadow of data and analytics. So, first, we'll set some context with some slides and some research, and then we'll move to a fireside chat and Q&A format. Next slide, please. So, when I was preparing for our discussion today, these words that you see here describing creativity came up over and over again, as did actually this very specific graphic, which I've included here. And as I look at the words on the post it, they're all excellent descriptors of creativity. But I couldn't help but notice that there was no mention or even an inference of business or revenue growth. And it made me wonder if that underemphasis on revenue growth was what was making creativity, the word creativity, kind of a dirty word in business. So I thought it would be interesting for us to think about redefining that word of creativity. And there's a really interesting Deloitte paper on 2023 marketing trends that I'd encourage you all to read. There's a lot of interesting insights in there to think about. And one of the trends that they note is that creativity is returning to center stage. However, it's not creativity in the way some company cultures think about it. It's not Super Bowl advertising. It's not clever campaigns. It's really about mindset and process. So it's a way of thinking and behaving versus the output. And when creativity is actioned in this way, it does contribute to business growth. In fact, while most companies are making a shift towards analytical skills across marketing functions, when it comes to talent, high growth brands are considering creative thinking as one of the most critical attributes of talent. That doesn't mean that analytic skills aren't important. It just means that they also know that creative thinking is a critical attribute. And so this is really good news for marketers, frankly, because those high growth companies are typically relying more and more on marketing for the most creative ideas. But again, it's really critical for companies to realize and redefine creativity as a way of thinking and operating. So I thought I'd have a little bit of fun with everybody here and show these pictures, right? And so you see here the iPhone, the Mona Lisa, the McLaren, and then Sunday afternoon on La Grande Jette. And so these all have something in common. And I don't know if it's occurring to you what that is, but they were all created by individuals who had the ability to bring together art and science, elevating their output and ultimately the users or the viewers' experience. So we all know about Steve Jobs. I don't think we need to take time here today to talk about how he brought together creativity and science and engineering. But did you know that Da Vinci achieved that effect where it seems like Mona Lisa's eyes are following you all around the gallery was because he understood the science of vision and he incorporated that into his painting. Joe Lewis is a lead designer at McLaren, and she is bringing together her creative background in textiles to specialize in engineering focused textile welding and technology to make materials lighter and stronger and still beautiful. So McLaren stands out from other luxury high performance brands because it brings together art and science. And then I found this really interesting. I'm a huge fan of Georges Seurat, and he was really focused on the science of color and achieving what he called maximum luminosity. And it wasn't really about mixing the colors on the canvas. Rather, it required that the viewer mixed the colors optically, and that resulted in pointillism, right? All those little dots that he used to create the image, actually, our eyes bring that all together and make that really, really beautiful and bright. So I want to, with that as some background, I want to talk about something that McKinsey calls the growth triple play. Um, McKinsey has been studying this intersection of art and creativity, or art and science, for a long time. And they've added to it by bringing a third dimension, which is purpose. And so this research shows that companies that master creativity, analytics, and purpose have higher growth rates. And so let's dig a little bit more into that research. So this slide here shows sort of that bell curve, right, of companies that are mastering creativity, analytics, and purpose. They drive 2.7 times the revenue growth of their peers. But clearly, this is not easy, right, because only 7% of companies have this mastery. We're going to go a little bit more in depth into the behaviors of what's called these high growth companies. So triple play companies really infuse creativity with analytics at higher rates than their peers. And here are some of the behaviors that they exhibit and sort of how they do these things more than their peers. So they're 2.5 times more likely to track return on investment on ad spend and have that tracking actually cause them to do something differently with their dollars. In other words, redeploy spend as a result. They're 2.5 times more likely to have an agile content creation process. So that enables them to develop and deliver personalized content at scale and almost in real time. They're 1.7 times more likely to view personalization as core to the customer experience. I think we would all agree that we really prefer experiences that demonstrate that a company knows us, knows our past behaviors, and can even anticipate our future ones. And they're also 1.6 times more likely to have a granular personalization strategy. In other words, they're looking at multiple factors not just demographics, but also attitudes, as well as the context in which the experience lives. The next thing that they do is around data and empowering data for decision making. That requires something that I like to think of as democratization, or making sure that the people who need the data have it, and it's not just the purview of a chosen few that are sort of the holders of the data and they parse it out to others. Um, and I think that this is really behavioral as well as attitudinal. And if you look here, from a behavioral perspective, these companies have easy access to data, and they also have a 360-degree view of their customers in a data lake or a data cube. And so the attitudes, though, are that the companies believe that analytics is critical to build and sustain a competitive advantage, and they believe that their data strategy also creates competitive advantage. And so when we took the poll, that culture change, right, those attitudes really do need to evolve and change, especially around data and decision making. And then the last piece here that triple play companies really understand is the power of having a purpose that is clear and well understood. People really do want to do business with companies that they respect and that share their values. We talk a lot about Gen Z having that attitude and that expectation, but frankly, we see it across generations. And this purpose and value proposition drives both employee loyalty and customer loyalty, as well as business decision making. And I think that you see this here, right? So 3.1 times more likely to have a unique value proposition that encourages talented people to join, right? So that's the hiring and the retention. 2.3 times more likely to determine what the company does or does not do with respect to new opportunities, right? So this is really, I think, where purpose or values, vision, whatever you want to call it, value proposition, is front and center, and really allows a high growth company to differentiate. Okay, so I wanted to do just quick context, which I hope that this was, so that Jade, you and I could get practical, right? I think that one of these conferences are best when it's just not all theory, and that we can get practical. Would love to also hear some practical things from the audience about what they're facing in terms of bringing together data and creativity. But I know you and I had a few questions that we teed up to get the conversation started.
Yeah, absolutely, we do, Emily. But that's such a good point. Obviously, the majority of you agreed that culture change was one of the biggest challenges. So come up and tell us why. Come up and tell us about your roadblocks and ask Emily for any best practices or advice. She's ready and waiting for you. All right, let's get going, Emily. We know Invesco, historically a B2B financial institution. So, how did you manage to weave creativity into that, what I imagine is quite a data heavily focused mindset?
You're absolutely right. It is a numbers business. And, I think the way culturally that we started to build a lot of energy around the intersection with creativity, with data and analytics, is by actually putting the customer at the center of decision making. And so, really thinking about what does data do there? Well, data gives you a lot of information about your customer. You understand what they're buying, what they're selling, right? This is investments, right? So they're buying and selling investments. You understand where they're going to make decisions, how they're gathering intelligence and information. So the data can tell you that. And then the creativity helps you create relevance and empathy, right? It's the emotional piece, right? So you have the two sides of the brain working basically. And I thought a fun example that we could talk about today was a program that actually, I think about as one of the things that I'm most proud of in my career, which was a financial literacy program for college students. And Invesco and their ETF Invesco QQQ are sponsors and partners of the NCAA, right? So the National Collegiate Athletic Association. And so as part of that partnership, we wanted to develop financial literacy for college students. And I think this was a real example of how we brought together data and creativity in a way to create relevance for college students, which was a completely different audience for us. And so happy to talk about that more, but I think that that's just a good example of by putting that college student in the center, that really changed our complete approach, even though financial education is something that asset managers like Invesco do all the time.
Yeah, but flipping the switch a little bit definitely brought that into perspective. Really nice, thank you. And so we're talking here about creativity and data, but as part of that sort of growth triple play you mentioned, we're
Yeah.
also bringing in purpose. So where did that factor into your strategy?
Yeah, look, so I mentioned it just, I alluded to it just now, which is, financial institutions, all of them really have a purpose to help people achieve the goals that they have for themselves and their families. And money is a facilitator of that, right? And so while it's about growing assets, of course, or protecting assets, it's ultimately about the purpose of helping a teacher or a firefighter really achieve the goals they have for themselves and their family. And financial literacy is critical here. Think about your own behaviors as an investor. When the markets are going up and down, very volatile, it's scary, right? And so, one of the most critical things that financial services providers do is help keep people buckled in, making good decisions, right? Nobody is selling high and buying low. In fact, in general, if you let emotions take over, you're going to be doing the opposite. And so, I think that, you know, realizing why you exist as an institution becomes very, very critical. And certainly was quite critical for us with the program that I mentioned that we did with the NCAA.
I can imagine. Thanks, Emily. And you said that campaign involved a particular way of thinking. Can you tell us more? Was it changing your mindset? Was it broadening who you thought were your audience?
Yeah, I think it was both, right? So college students weren't a core audience for Invesco or for most asset managers, as well as, how do you talk to a college student? When you're typically speaking to established professionals, financial advisors, institutional investors, it's a style, right? And it's very PowerPoint driven, very fact based, lots of bullets, and but that's not how college students think and learn. And frankly, they have so many things competing for their attention. You really have to figure out a way to stand out. And so it was about evolving our thinking. And again, it goes back to putting your customer at the center, in this case, the college student. We did everything that we did was research based. We built panels of college students. We watched their user behavior digitally with the app because we needed to know, we didn't know, and so we needed to know how do they learn, who do they get advice from, who do they respect, and what we found was so interesting. They want to be financially literate. They do, right? They really know that it's core to their longer term success. They have so many options on how to get educated, right? TikTok, frankly, is has the most financial education content now of any application, right? Any social media application. And how do they know it's right? They have a lot of anxiety about this. And so, what do we tend to do when we're anxious? We push it away, we ignore it. And so, this was something where they really, really informed, the creative output of the program, including
Incredible.
the name, right? I think you and I laughed a little bit about the name. The name of the program is How Not to Suck at Money.
Yeah.
And that was a very controversial name, frankly, with executives, as you can imagine, including with the NCAA. But we conducted research with the college student panel, and they loved it. Right? It felt like me, right? You have a title in vernacular that I use, and you're clearly not a stuffy, firm or company. You really know me, and you're talking in the way I speak. And so that was the name we ended up going with.
Yeah, it's fantastic. I love that was so research backed as well, going with that "How Not to Suck at Money" title for the campaign. We have got some questions coming in for you, Emily.
Wonderful.
We're going to welcome up once more Jonah from NBC Universal. And Jonah, I'm really glad you are here because earlier on, actually, it might have even been yesterday, you mentioned had a brand ever had to change their audience or their customer? And Emily has just given us an example of how they had this campaign catered for students who weren't previously one of the in their primary customer base. So I wonder if that was interesting to you, Jonah. And sorry to jump on your question. Please feel free to ask that too.
No, absolutely. I mean, it's great to hear, and I'd be curious to hear a little bit more if there's time in the session about the sort of time frame and the sort of like internal tactics to change your target audience like that for a product. Also interesting because in a highly regulated industry, it's always more challenging to make those changes in marketing and messaging and what can we say, what we can't say. Um, and then on the elements, what my question was about, I loved all the slides and the research and data about that, outperforming growth, super interesting. I was curious if you had any thoughts specifically about, differentiating based on purpose. And I
Mm.
just had two aspects of that, which your thoughts on this, how public facing you believe that purpose should be, right? Is that a big part of your actual go to market, or is that more of an internal thing? And then how vital you think it is to find altruistic and sort of do good elements around that purpose in today's environment. Somebody messaged me on the side saying, it has to be organic to your brand DNA as well. But I think there's also just a market requirement now, right? That we add different, these altruistic and do good elements to the purpose, or we sort of will fall flat with both consumers and employees.
Yeah, so I think let's talk a little bit about purpose. There was a lot in your question and your observation, so maybe I'll pick them apart a little bit. I'm a big believer, as it sounds like you are, and whoever messaged you, that you can't fake a brand, right? You can't fake values. They have to be what the company is living by, and it's the same with, I'll say, you called it altruistic measures. You can't just do them because you think it's something on the checklist for demonstrating your brand. You have to do it because there's somebody or leaders at the firm truly believe it. And because I do believe that consumers can sniff fakes out really quickly, really quickly. I don't want to go down the Anheuser or the Budweiser, rabbit hole, but there was something there that made people feel that somehow it wasn't as authentic. Otherwise, and they're flip-flopping on what happened post, the sort of outcry from their core customers. I think demonstrates that they weren't really sure why they did it. They just figured, well, it has to be done. And that you will not, that's what will happen, right? And I think that also speaks to your question around expanding your customer base, right? So it's not about choosing new customers over old ones. It's like, how do you naturally and organically expand your customer base, right? So when Invesco started looking at college students, which was an appropriate thing to do given the NCAA partnership, it wasn't to exclude others. It was to include them, right, in the offerings that that the company could deliver. And I think that's certainly my experience, which is how do you bring others into the fold? And sometimes you have to do things differently, right? College students learn differently, have I'll say a different level of knowledge, sophistication, asset base, et cetera. So you have to do things some differently, but it's about including them into the to the overall audience, not excluding some other. That's a tricky balance, and maybe in some ways a little bit easier to do in financial services, because ultimately everybody needs a bank, everybody needs to grow investments, et cetera, et cetera. But that's certainly how I've always thought of it, as more inclusion than moving away from. And I don't know if there were other parts to your question that you wanted to unpack. Those were the two that I recalled off the bat.
No, that was great. I think the only other one was just how public facing that
Oh, the brand.
purpose.
Yeah. No, that's a great
Should that be a
question
market
too.
facing thing or an internal piece?
So that was something that I really have I faced a lot in different firms that I've been at, where people think that a value proposition or a brand promise, whatever you want to call it, was a tagline. And suddenly you'd see it, and people would be mocking it up. They'd be putting it at the bottom of their signature, and it would be like, whoa, 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 like, no, like this is an essence, right? This is not a creative expression, and that is very, very, very difficult for, I'll say, non-marketers to understand. They jump to, it's a tagline, and that was always quite frustrating to me, because in some ways you're doing your purpose a disservice, right? You're almost making it less than it should be, because to your earlier point, right, it should be a driver, and as you saw in the McKinsey research, right, it should be a driver of business decisions. What do you do? What don't you do? It should be a driver of your philanthropic efforts. It should be a driver of a lot of things. It shouldn't just be like a tagline. And I think that was something that certainly in financial services, I've struggled with, convincing people that it's not just a tagline.
Okay, great stuff. Thank you, Emily, Jonah. Lovely to see you. Thank you so much. Cheers. And we're also welcoming back to the stage Derek Defoe from Sofitel Group. Hello there, Derek. What's your question for Emily?
I'm decided I'm destined to follow Jonah as he goes on stage. So I'm really fascinated with your story around how not to suck at money and pivoting, right? You're pivoting what Invesco stood for years into kind of a newer market. And my question centers around balancing the ROI between short-term and long-term initiatives, because obviously we all get sucked into as marketer. Did we sell more cases? Did we get more investors?
Yep.
Did we do this? These are all short-term metrics, but how do you keep the company focused on the long-term vision and
Mm-hmm.
and measure the long-term success? Because too often I think we, as senior management or sales-driven companies,
Yep.
if the short term is not delivering, you bail because you're not really
Yep.
invested in the long term.
Yeah, that's really, a wonderful comment, and I will answer it to the best of my ability, because I don't think anyone has really unlocked that tension, or resolved that tension. So a couple of things that I would say. When a company decides to do a sponsorship like we did with the NCAA, or a partnership with the NCAA, you have to carry that all the way through, right? You're going to have to do things differently as a result. You're going to have to invest in different ways than you did before, and you chose to do that. And so I think that is the first thing, right? You have to stick with that, at least through the terms of the partnership, right? You have to stick with that.
Mhm.
I would refine your opening just a little bit, which in the end, this idea of financial literacy is something that Invesco had always been focused on, just with different audiences than this one. And so it wasn't a shift away. It was what I talked about before with Jonah, which was it was including others into that ecosystem of financial literacy and financial education. It's just being done in a way that's more resonant to them than it would be to, an institutional investor, right? So it felt like natural, right?
Mhm.
The other thing that I'd like to mention, though, is something that I've seen start to happen in B2B companies, which is a little bit more focused on client lifetime value or customer lifetime value, right? And so I see more and more companies, including Invesco, really focusing their data analytics teams on, yes, of course, identifying the people who will make you the most money today, but also understanding that there are others who aren't quite there yet, but who will be there yet, or who will be there, and using predictive analytics to demonstrate that. I think that is, obviously when you have both either a manufacturing-led or a sales-led organization, and most companies are either of those, and not a, I'll say, a customer-led organization, which is what I think the high-growth companies are more customer-led. You have a lot of, well, we don't really believe that analysis, right? We don't believe that, because what we and especially when you're a publicly traded company, you unfortunately, sadly, your short-termism is real, and you manage quarter to quarter. And so, that's a tension there. But if you can start to get companies to focus a little bit on customer lifetime value, even if it's an overlay on existing segmentation that is maybe a little more short-term oriented, you're starting to move people's mindset in the direction of longer term. But I think, especially for publicly traded companies, that tension between short term and long term is very real.
Fair. Thank you.
Yeah.
Great response. And thank you so much. Great questions, Eric. Do take care. Good to see you. Right, Emily, unfortunately, we are just about out of time, but thank you so much. Like you said, we talk so much about the high level points and strategy, but you really got in there with some great best practices and takeaways. So thank you so much for sharing those. I'm really grateful to have you here.
Jade, it was a pleasure, and I appreciate the questions. And obviously, maybe Jade, I'll share my contact information, or you have it. If people have other questions, I'm happy to engage in dialogue either through email or LinkedIn or elsewhere.
That's lovely to hear. We will indeed share that on. Thank you so much, Emily. All the best.
Take care of everyone. Bye bye.